It's Sunday the 17th of January 2016. This is a chart of the S&P 500 index. Um, it's been a really poor start to the year for the S&P 500, just like all the other major world indices. I think a lot of the blame is being placed on China, but the US economic data is not that flash either. And people might just start to wake up to that, I think, now. All the retail sales figures, industrial production, everything is looking weak except the jobs numbers, which even the jobs numbers people are starting to question now. That'd be the one thing that economists would look to justify raising interest rates and all the bullish sort of talk around the US markets. This chart, I've just these lines are really just start to end points for the year. So I was doing some long-term sort of looks at the S&P 500 to try and get a feel of what stage of the cycle we're at. So these are each box here is a calendar year. So you can see we've had this really good trend, and we've really paused, and it's similar to 2007 actually. 2007 had this almost this double top formation. You could even call this a bit of a head and shoulders pattern on the S&P 500 here. And obviously 2008 was a terrible year, almost finishing near the lows of the year. But I thought there's quite a lot of similarities between these two. Really steady years, and I think there's some real potential here for some downside action. I'm not sure about these targets down 1200 or something, really low targets, but I think there's definite potential for a move. If you call this a head and shoulders pattern with the left shoulder here, head, right shoulder, I think you can easily say that a move of that magnitude is possible, which puts a downside target around 1600. And that's only 15% or something. And in normal times that would have been not necessarily a terrible move, but there's a lot of people aren't used to seeing the index go down these days, or seeing their stocks go down after 7 or 8 years of money printing by the Federal Reserve and other central banks. So this market action is really starting to alarm some people, I think, who aren't used to. You can see this move here. The volatility. There's not much volatility for almost 2 years here. That the moves are any down days, any down weeks are 2 or 3 at a time. But you're not seeing this sort of magnitude of move is really what you tend to see toward the top of a market. You can see here in 2004, 2007 was similar. Like all these dips are bought, quite small move pullbacks, and then you see at the top you get this real volatility, which is a sign of distribution. And that looks like we've got at the moment what we've got at the moment. So downside targets, 1600, I think is quite possible. Which you can see here. This is also near the old 2007 high, which I think is also around the level of the high in the dot-com bubble as well in 2000. So 1550, 600, 1600 is a bit of a level for it to look out for.